Give me your name and your...
John Navin. I'm one of the Marketocracy and Folio managers. Matt Schiffman has interviewed me in his book, Warren Buffett's Next Door. I started with Marketocracy in 2001. We bought gold and silver mining stocks. 25% of the portfolio was Newmont. This was when gold was $290, $300 an ounce. Held it for 3 or 4 years. With Marketocracy, the stock trading money management competition, I ended up in the top 10 out of about 20,000 participants for the first year. I was top 10 out of about 70,000 participants after 5 years. And that's how we got started with Marketocracy.
So the gold and silver was a pretty good one-decision decade for you.
It was wonderful.
How did you know to get into gold and silver then? What was it?
I do technical analysis. I look at price and volume characteristics. I do some Elliott Wave theory, widely derided as voodoo. But if you know how to do it, and you use other technical factors. Also, I was a broker with Dean Witter back in the early 80s. So I have some background and knowledge about asset classes and financial markets. But to tell you the truth, I couldn't say why I was more outstanding than the next guy. My timing was good, so I seemed to know what I was doing. I didn't hold them until 2008, or it was like 3 or 4 years. I was short during the 2008 bear market. So for a while there at Marketocracy, I was number one.
You shorted the market before the 2008 crash.
Right, that's what I was.
And you made a killing in gold and silver stocks.
Well, killing, I did well.
What do you do wrong in investing then?
Well, lately I've been short the market since about 1,200 on the S&P, so I'm way behind. And some of them are leveraged, but I'm not changing what I'm doing, which I think I'm going to be fine. I know that John Paulson, the legendary hedge fund manager, when he shorted the housing stocks, he was 1.5 years, 2 years early, and he sat on it. I think it's the same thing with the stock market right now, so I'm staying short.
Primarily, why are you still short the market, though? You've had, it seems like the volume's been there, and the momentum is there.
Sentiment on the dollar is 90 to 95% bearish. Last sentiment figure I read. That's extremely overweight on one side of the market. The dollar and stocks trade inversely. They have for years. So I expect the dollar to gain in strength. It should be a substantial rally in the dollar, and that means the stock market's off. I'm looking for 875 to 900 on the S&P. It sounds strange from here since we're in the middle of this huge rally, but that's what I see. I noticed that a fundamental analyst, Jeremy Grantham, famous guy, he studies economics. He thinks 910 on the S&P is about right. I agree with him looking at it from a technical analysis standpoint. That's why I'm short. I'm hurting now, but I'll be okay later.